Hey, what's going on, guys? This is my second attempt at recording this. Just want to make this quick. There is finally some sort of update that I can give to you guys. As you can see here, we've had very low volume over the past couple months. There's been, a couple, here's and there's, but very low volume, not a whole lot going on. Today, we finally saw some sort of blip, something that we can actually talk about. So let's quickly go to kind of where we've come from and where we are. We initiated this position back in January of 2019. We got in early, okay, and if you go back to my previous videos, I talked about that, about getting in early, and so I'm fine with that. So we initiated one position at 11.19 or 11.20, we'll call it, another position at 9.60, and then a third position at 8.17. Now, I always talk about never ever going into any one position with more than 25% of your total cash balance. So as you can see, we have 1, 2, 3 positions here, and so we still have one more in the chamber if need be. I don't know if that'll happen. Honestly, I don't know. Again, like I said, just because there hasn't been a lot of volume, there hasn't been a whole lot going on. I think right now the biggest story is the trade deals. The Canada trade deals kind of petered out. No one's talking about it. Honestly, I don't know what any new, if anything, has been said or done about that. Right now, the big story is the China trade deal. That's what's causing some of the volatility that we've seen today in the past couple days. You see here we did get a little bit of a dividend back in March, so that's cool. If we held this thing for another month and a half or so, we'll be looking at a second dividend, which will be actually a little larger because this dividend is based on 1,060 shares currently. See if I can show you. I don't know if I can. Yeah. Currently, we're sitting at 1760. So if we did hold this position for another month or so, then we'll have another, slightly larger dividend. All right, so that's that. So just want to talk to you about what I'm looking at here. Okay, so as you can see, the RSI right now is at 58, which has been basically the top. Going back all the way to October, if you can see back here, right, going all the way back to October, 58.60 has been the top. We have only one time really gotten beyond that, and that was back in December of 2018 when we had this huge amount of volume here that really catapulted this ETF into the stratosphere. And so if we are able to get above, I'm gonna call it 60, okay, if we can get above 60, then who knows what can happen. Now realistically speaking, what can take us above 60? I don't know. If we have some issue with the China trade deal, maybe that can take us above 60. We've had some murmurings from the Fed concerning economic outlook. There has been some talk around the campaign and all this kind of stuff, so we don't know. We'll see. Brexit really hasn't been much of an issue. There's not a whole lot to talk about when it comes to inflation. Job reports are still looking good. They have had some companies I've heard that are laying off, but I don't think that's anything to really worry about. The housing market is definitely cooling off. Maybe if we got like some really bad news concerning the housing market, that can take us further down. I think generally speaking, overall, I think the market is just cooling off a little bit. It's ran really hot for the past few months. And so I think that's kind of where we are. So again, like I said, we're at roughly 58 now, almost 60, where 60 being the top for last 6 months really. And so if we are able to get above 60, then and again, when I say above 60, we're really talking about the volume, right? Because the relative strength index is based on price movement and volume, and so the volume is what's really necessary. Now I want you to kind of take a look back here. Before we had this huge amount of volume, we had spurts of volume, volatility, lots of buying and selling, right? We really haven't seen that. There's a little bit here, a little bit there, and then just not a whole lot. So unless there's a lot of money that comes back into this thing, I really don't see the volume spiking really big. At this point, I'm looking at possibly exiting at a wash. We're currently just to show you, currently at 948, which of course is a function of us getting in so early at that 1120 price. So we're at 948 now. Honestly, if I get out at a wash, I'm happy with that. I really am. But who knows? Like I said, if this thing goes above 60, we can stand to make a little bit of money here. Let's take a quick look at FAS, see where that is. Let me get this to my 6 month. There we go. There we go. All right. Same thing, just not a lot of volume. Not a lot of volume at all. Hasn't really done a whole lot. Back here, again, December 2018, lots of volume, lots of money coming in and out of this thing. That's what we need to see to really have any type of strong price movement. There just hasn't been a whole lot going on. Not a lot of motivation. There's an old adage, sell in May, go away, right? And so summertime typically is lower volume anyway. So again, I don't see this thing really taking off anytime soon. The RSI for FAS is at 40, which, as you can see, it's kind of been bouncing off of for quite some time. Same thing there, right around 37. It's been bouncing off of that. The one time that we did break below, looks like 37, was right around there, right? And you see this huge drop that happened back in December. Again, can that happen again? I don't know. Honestly, I don't know. We'll have to wait and see. But I'll tell you, it's been pretty boring. It really has. But these are the two ETFs that I'm sticking with right now. At some point, if we continue seeing this low volume, I'll have to look at possibly getting into some other levered ETFs to really get more bang for my buck. But right now, this is where we are. Now, if you recall, the RSI at the bottom of this thing is 20. And like I said, we're at 40 right now. So we're right in the middle of this thing. And the price got well above 70, which is kind of where I predicted it would go. It did get up above 70, and now it's starting to come down. And the question becomes, where is it going to stop, right? If we look at 65 here, that was a previous top. I can definitely see it making it down to roughly 60, we'll say. I don't think it'll go any further than that unless we do have some real issue in the market. I don't think it's going to get much further than that. So 60 will probably be a decent buy-in, and then and who knows, depending on volume, they may take the RSI down to 20. It may not. Again, we'll have to wait and see. That's the update. Like I said, it's been really boring. Not a whole lot to say about things, but this is kind of where we are. The aftermarket does show that there has been a continual slide, not so much for FAS, but FAZ. Well, after hours did show about a percentage bump up on FAZ. That has since gone away. See what happens if I, yeah, so that's going away. So again, we'll wake up tomorrow and see what happens. And so again, we have one more bullet in the chamber. If we see this thing break down to 20 again, we'll definitely buy more and bring down our average cost. You know, if I were to get this thing, let's just play around some numbers real quick for my own benefit here. Let's see, 75. We're gonna take the total cost now, do that 75, and then look at possibly what, maybe another, we'll call it $8 maybe, you know, just for the heck of it. We'll say $8 plus 711. It brings us to about $9, which again is still kind of high, honestly, but not terrible. So again, this is where we are, and hopefully I'll be updating you guys maybe another week or two. Again, like I said before, depending on what the RSI is, depending on what the volume is, I may go ahead and just exit out at a wash. If we see a lot of good volume, if the RSI is holding under 80, then I may let it ride and see how much money we can make on this. So that'll be my next update. I'll holla.